Over the weekend, US President Donald Trump announced that the United States conducted a military operation in Venezuela that resulted in the removal of President Nicolas Maduro, and that the US government would temporarily administer the country during an interim period. Trump also said that American oil companies are prepared to invest billions of dollars to rebuild Venezuela's energy infrastructure. If these conditions hold, they mark one of the most consequential geopolitical shifts in the Western Hemisphere in decades. You see, Venezuela is not simply another country undergoing a political change. The country occupies a central position in the global energy system because it holds some of the largest proven oil reserves in the world, and for years, those reserves have remained largely inaccessible due to sanctions and political isolation. So, a sudden change in the country's governance forces global markets to reassess oil assumptions because energy markets do not operate solely on the current production levels. They rely on expectations about future access, political continuity, and the reliability of a long term investment. So, when a country with as much oil reserves of this scale as Venezuela experiences an abrupt shift in control, those expectations must be recalculated. This recalculation does not wait for stability to be established. It begins immediately. Even before any oil production changes, the global system begins to respond, and Trump's statement about U.S. oil companies investing billions in the country's oil industry significantly affects this recalculation, making the regional implications even more significant. Latin America has a long history, one that is shaped by external intervention, particularly when it intersects with natural resources. As a result, governments across the region tend to interpret events not only by their stated intentions, but by the precedents they appear to set. For Brazil, the region's largest economy, this development raises immediate questions because the country has its own energy ambitions, its own strategic industries, and its own role as a regional leader. A Venezuela administered temporarily by the United States, followed quickly by large scale U.S. corporate investment, alters the balance of influence in South America and introduces uncertainty about whether regional coordination will be strengthened or sidelined. This leads to a critical question that policymakers in Brazil are likely considering. If economic access follows political intervention this closely, how secure is regional sovereignty for countries that are not directly involved? Mexico, on the other hand, faces a different but related situation. Both as a major energy producer and a close U.S. trading partner, has historically guarded its energy sovereignty carefully. The country's constitutional protections around its oil and gas industry are not just economic policies, they are tied to national identity and political legitimacy. So, observing another Latin American country get invaded, a foreign administration proposed, and oil investment following a military operation is likely to sharpen domestic debates about independence and leverage, and other South American nations, even those with smaller economies, will be watching for the same reason. The concern is not necessarily that intervention will spread, but that the rules governing sovereignty may appear conditional, and when that perception takes hold, trust in the global order erodes even without direct confrontation. Beyond the region, the global supply chain implications are substantial because energy sits at the base of our modern supply chains. Transportation, manufacturing, food production, and logistics all depend on a stable and predictable energy inputs. So when energy assumptions shift, these costs ripple outward. Even the perception of instability in key regions can alter the supply chain, and these changes add friction to a system that is already under strain from previous disruptions. For households, these effects will appear through prices, and over time, those costs will show up in grocery bills, utilities, and everyday services. This leads to another question that matters far beyond policy circles. How much uncertainty can the global supply chains absorb before households begin to feel sustained pressure on everyday costs? The timing of these events adds another layer of complexity because the global economy is already absorbing multiple stressors. There are conflicts in other regions that have already strained energy flows. Trade relationships are becoming increasingly politicized. Inflation pressures have barely eased, leaving households and governments with limited tolerance for additional shocks. And in this environment, introducing a major new variable into the energy system increases fragility. This is why global powers outside the Western Hemisphere are paying close attention. China, in particular, may study how this invasion is absorbed by the global system. The political, historical, and legal contexts are different. However, strategic actors examine how power is exercised, how international responses unfold, and what economic consequences follow political force. This does not mean events in Venezuela points directly to Taiwan, but moments like these can quietly shape how strategic calculations are made. From Beijing's perspective, the key variables are not Venezuela itself, but the global reaction. How quickly do markets adjust? How do allies respond? Does intervention lead to prolonged instability, or does the system absorb the shock with limited resistance? And this leads to the next question. When global powers observe how intervention is received and absorbed, does it reinforce restraint or quietly reshape expectations about acceptable risk?